Teen girls might be getting more involved in crypto. Welcome to CNBC After Hours. I'm Pippa Stevens. Let's kick it off with how the markets fared today. It was a good day for the three indices, all of them climbing more than 1%. That's after a sell-off on Monday that was led by tech stocks. Big names like Netflix and Amazon were solidly in the green today, though. It's good news for crypto, too, with Bitcoin crossing above $50,000 for the first time in a month. As of 4 p.m. Eastern, Ethereum jumped 2.5%, while Dogecoin climbed 11%. All right, here are some other numbers that you gotta know. First up, $7 billion. We probably don't have to tell you that Facebook was down yesterday. For about 6 hours, Facebook, Messenger, Instagram, and WhatsApp were completely inaccessible to billions of people around the world. Word on the street, though, productivity soared yesterday. And while you lost the ability to update your Insta story, Mark Zuckerberg lost about $7 billion. The stock fell roughly 5% during the outage. Next, $137 million. Tesla's been ordered to pay millions of dollars to a former employee after he endured racist abuse at the company. A San Francisco judge ordered Tesla to pay just under $7 million for emotional distress and $130 million in punitive damages. And the legal battles for Tesla are not over. There's a pending class action lawsuit which claims Tesla is rife with discrimination. Finally, $12 million. We now have a clearer picture of where the wealthy are hiding their money to evade taxes. A dump of 12 million files dubbed the Pandora Papers reveals big investments in secret accounts, real estate, and even yachts. Now, you may be thinking that the rich are taking to private islands for their tax havens, but really, South Dakota is among the most popular places to store wealth. All right, twice a year, Piper Sandler looks into what teens care about most. The Taking Stock with Teens survey asks about favorite apparel brands, the top places to eat, even issues like climate change and racial equality. It's all in the name of finding out where teens want to spend their money. CNBC's Courtney Reagan walks us through the survey results, including a growing trend of teens investing in crypto.
So Piper Sandler is out with its biannual Taking Stock with Teens survey. So teens often are a good leading indicator for fashion trends. Teens think things are much cooler, a little bit faster, a little bit earlier than the rest of us. And right now what's really big for teens are the 90s influence, which is crazy because I remember being a teen in the 90s. Teens absolutely love Nike. Nike reigns supreme again and again in the survey, no matter if it's spring, if it's fall, no matter if it's boys, if it's girls, if it's apparel or it's footwear. Truly, Nike gets that #1 brand spot, and by a really wide margin. So food is a really important part of that wallet spend for teenagers, whether it's males or females, upper income or average income, makes up about 1/5 of all spending. And Chick-fil-A, Starbucks, and Chipotle come in number 1, 2, and 3 for this fall survey. So this teen survey asks very similar questions over the years and has a really nice historical analysis for many of the topics. But one of the newer ones that's been asked of teens is about cryptocurrency. And 9% of teens said yes, that they have bought Bitcoin or another cryptocurrency. And then when you peel below that 9%, 78% of those that answered yes to that question were male, so predominantly male. However, that is down a bit from when this survey asked the question previously, indicating perhaps more females are being interested in that space. Teens that traded crypto also tended to be a bit older when you're talking about the age range of those that were asked these questions, and they did have above average household incomes. And of course, when it comes to online spending, teens are kind of like the rest of us. They do shop online, but there is still an interest in-person, in-store shopping, and actually perhaps a little bit more of that as a teenager because of that social aspect. It's that pent-up demand and that need to sort of go back to the stores for a while, and maybe once that's satiated, then they sort of move on and they go back online and back to Amazon with the rest of us.
All right, before we go, here's one last thing to know. We caught you up on the outage at Facebook, but that's not the only reason the social network is in the news. Whistleblower Frances Haugen testified in front of a Senate panel, telling lawmakers they need to intervene in the, quote, crisis created by her former employer. Haugen leaked documents to the Wall Street Journal, including research that showed Facebook could be harmful to teens. She said in the hearing that Mark Zuckerberg needed to be held responsible for the company's impact. Facebook responded to the hearing, saying it disagreed with her characterization of the company, but that standardized rules for the internet are needed. You can read about Haugen's testimony along with everything else we talked about today by going to CNBC.com or downloading the CNBC app. That's all for today's edition of After Hours, but we'll be back here every Tuesday and Thursday, and we will see you then.